Last night, the world was watching for NVIDIA's earnings report, and today, the world is reacting. Here to break down the market movement after NVIDIA's earnings report is MarketBeat analysts Chris Markoch and Thomas Hughes. Guys, there has been a lot of movement on NVIDIA. Thomas, break down what the market is doing this morning.
Well, the initial reaction was to move lower. I think at the low of the post-session move yesterday, it was down about 10%. When I was going to bed, I think what I saw was down about 7%. Right now, it's down about 3.5%, but this is a negative move considering how strong the report was.
Yeah, and it's not just NVIDIA that's doing a lot of movement this morning. It's kind of the whole industry, right, Chris?
Right. There was some news that came across. I don't know if it was. It was probably like right around the time the market closed last night. Supermicro is delaying the release of their 10K. There's a report that's coming out that there are some potential accounting red flags. You never like to hear that. It's kind of weighing on the broader chip slash technology market. I noticed there was a broader tech sell-off going on last night that wasn't just NVIDIA. NVIDIA was just one of the ones that was the most obvious of that.
An obvious decline and a lot of
Yeah.
volatility, but it's coming at a time when NVIDIA really had a stellar earnings report, 122% growth year over year. Thomas, why is that growth not translating to a run up in the stock right now?
Well, because with the trends and the forecast and the revision trend and the expectations, the report was really nothing but what the market wanted. And the market is a front-running, forward-looking machine. What we're seeing right now is a peak in market sentiment, which is going to be a pretty substantial headwind for the price of the stock, I think, over the next month or two.
Now, last night in our video reacting to just the earnings report, Chris, you mentioned that they had a home run, but the market was really expecting a grand
Right.
slam. And I do think that that's the case. Last earnings report, NVIDIA saw over 260% growth. And even though 122% growth is still impressive,
Mhm.
it's not, what they had last quarter.
Right. And so the the fundamental argument against Nvidia is fundamentals. It's the valuation. People are just saying the stock is just unreasonably overvalued. One of the principles, I guess, that's being used to justify that is something called the law of large numbers. This is a statistical concept that's based on probabilities and such. This is a table that shows the last several years of NVIDIA's earnings reports. And this is where we were last night. The 30.04 billion in revenue that they generated in the last quarter. And that compares, as you can see, very favorably, 122% higher than the 13.51 billion that they generated in the same quarter in the previous year. Now look at all of these numbers down here. And those are significantly lower than that. And now look at next quarter where it was 18.12 billion. What would NVIDIA have to hit to generate even 122% growth above and beyond that? And I think that's where the law of large numbers is basically saying NVIDIA is going to eventually, they're going to regress to a mean. Now that mean is not necessarily going to be down at those $6 and $7 billion numbers that they once were, but what they're saying is it's unrealistic to expect NVIDIA to continue growing at the rate they're growing, even at the 122%. And so therefore, it doesn't justify the price to earnings that they currently have or the price to sales that they have. Bridget, you and I were talking right before we came on. I said it's like a batting average in baseball. If you have a player who's never hit 350 before hitting 350 for an extended period of time, eventually people are going to say, well, no, eventually they're going to start hitting back to whatever their statistical average was. That's what's going on here with NVIDIA is people are just saying it's not necessarily that the company had a bad report. It's just that statistically it's almost impossible for them to keep doing what they're doing.
Right. Like the run up in stock price over the last 2 years is because the earnings were growing. They were outperforming in a way that was above the market expectation and continued to accelerate. This goes along with what I was saying with the peak in market sentiment. NVIDIA's business hasn't stopped growing, but the market has stopped expecting it to grow at a wicked
Right.
hot pace. And what we're looking forward to now is industry normalization. Eventually, all of these new data centers will be built out, and all the orders to replace the old chips will have been made. In that scenario, what will happen to NVIDIA is that its business will normalize And the question is, at what level will it normalize? It's going to come back from the peaks that it is now. How far will it fall back and where will it stabilize?
Investors still have to remember that NVIDIA has 85% market share. Their profit margins are still over 70%, and there's no competitor that's immediately positioned to take over the premium market that they have. So even if companies are looking to pivot away from NVIDIA, they're still going to be likely to pay the premium price for NVIDIA's premium products.
Let's shift to the earnings call that happened. There was some pretty big news about Blackwell in that report.
Yeah, they announced that they've shipped out the first of the sample models and they're planning to start ramping production in Q4. They didn't really say specifically when or how much production will ramp, and there is still some concern about delays. Now, this concern is showing up in the price action for stocks like Dell and Supermicro, which rely on those chips to build out their servers. So there is some concern that there will be some server build out delay that could impact the construction of new data centers and the build out of AI infrastructure over the next year. That will certainly impact the outlook for all of these stocks, including NVIDIA.
So, all of that considered and all this growth on the horizon, what will it take for investors to be impressed with NVIDIA's growth in the future? If 122% growth isn't enough to satisfy, what can NVIDIA do to satisfy what the market would like to see?
I mean, right now, what it looks like is they'll need to make another revolutionary advance in technology to reignite a new revolution in technology. Because right now, what's happened is that revolution is underway, and what we've seen over the last 2 years is just the ramp in the expectations. And now what we're seeing is those expectations are kind of topping out, and that's going to impact the price action. I think earlier Chris mentioned the valuation of the stock. Now, NVIDIA is not exactly comparable to names like Apple and Amazon and Microsoft because it's still younger, it has not quite matured the way that they have. But looking forward, its 2026 price multiple is about 33 or 34 times earnings, which puts it right in alignment with the valuation for blue chip tech stocks today, which means that all of its growth is probably priced in. It will need to come up with something new in order to reinvigorate market sentiment.
So, unless they have another major tech announcement coming, I think we can expect what Chris had said, which is that a little bit more normalized growth as they evolve as a company. So, is this a company that you want to get into if they're reaching that peak and point in their lifespan?
Investors kind of have to look at this like, don't fight the trend. And in the immediate aftermath of the earnings report, we don't know what that trend's going to be. I still tend to think that it's going to rise above where it closed yesterday. But right now, the trend still seems to be that investors want to move it higher. That's what analysts are saying. So I don't think I would fight that trend right now. It doesn't mean that the bears have a bad argument. It's just that the trend isn't going in their direction right now. As far as what this means for the broader market, I think there are other issues that are going on. Certainly the Fed potentially cutting rates next month and what that might mean for sector rotation that are going to affect the market much more than NVIDIA's results. Right now, though, in terms of if I were an investor, yes, I would be looking to buy any dip in NVIDIA. I don't think I would be chasing it too much higher, but I'd be looking to buy on dips.
Right. The analysts are responding favorably. They're raising their price targets. I do expect to see NVIDIA move above 150 over the next 12 months.
Yeah.
But as Chris says, there's lots of macroeconomic headwinds. September's typically a bad month for stocks and chip stocks in particular. And with slowing growth and growth priced into the market, there's a lot of reasons to believe that NVIDIA's stock price will experience volatility, if not a significant dip between now and the next new high.
Yeah, Thomas, your article has exactly that headline, buy the dip, but expect the volatility. You can click that link and read all of his article there. Thank you both for breaking down everything that's happening in the market, reacting to NVIDIA's earnings report last night. We'll, of course, continue to follow it all right here on MarketBeat. Happy investing.